So Income Tax Act classify our income into 5 different heads from where all you will get income. Not that important at all, but just have an idea. Now this is actually the core thing. Okay, what do you mean by tax deduction? Okay, actually I want to discuss this concept, what is called as part of your, see why this topic have become important, because interim budget, which is a February 1st current affair. The date have become, it's not because of interim budget, it is because of the time period. Okay. So it is said that in relation to income tax, what it is said that if you are having a net taxable income up to 5 lakh, then no need to pay tax. So this income tax savings are those instruments which can bring down your gross taxable income to net. See, if you deduct from your gross taxable income, if you reduce these income tax savings, different types of income tax savings, it becomes net taxable income. So the tax exemption is not for gross, tax exemption is for net taxable income up to 5 lakh. So just have an idea. When you file your income tax return, you have to show, if you are a salary person, you have to show income from salary, and if you are having a property and you are getting any rent, you have to show that income from house property. If you are doing business, you do that. Capital gain, you have to mention that. Income from other sources, you have to mention that. Okay, so these words have used at different places. Income, angel tax, you remember? In angel tax is considered as, that I know, this word I have used there, income from other sources. It will be considered under the income tax law, income from other sources. Okay. So tax deduction is, you can deduct certain amount when you calculate your taxable income. So that is, so gross taxable income becomes net taxable income. Okay. The most common provision under the income tax law which give you tax deduction. Okay. I have explained a concept what is called as tax expenditure. It was a mains question. Okay, I think in 2013 mains question, 10-mark question. What is tax expenditure? All these tax exemptions are, it is not expenditure for the government to collect the tax. It is the tax exempted by that amount of money every year the government is losing because of the different tax exemptions. These all are what, there are many tax exemption provisions are there. Most common is Section 80C, which core point about Section 80C says that a deduction of up to 1.5 lakh. So everybody was thinking that the government may increase from 1.5 to 2, but it didn't happen. Rather, the government gave a different this provision. Okay, so under Section 80C, up to 1.5 lakh, you can claim, means it can deduct from your tax. This deduction, it can be for an individual or for a Hindu undivided family. Now what are those? See, these are the, this can be a question for you. This can be, which all investment and payment are eligible under Section 80C. But try to understand that wherever you invest, maximum tax 1.5 lakh. Maximum 1.5 lakh. Okay, you can have like this. If you are having 50,000 life insurance premium, then this also you can use it. What you are paying here is tuition fee, you can deduct if you want. Okay, then Suganya Samriddhi Yojana, which is a small saving scheme for girl child, which is a post office saving scheme. Then remember this, which public provident fund we discussed. Again a post office saving scheme. The public provident fund comes under this. See the relation. If you are contributing to EPF, but again, don't think, okay, 1.5 lakh to EPF, 1.5 lakh to EPF, 1.5 lakh to NPS. No. Only you do it. So again, NPS is also their contribution to. So what all topics which we discussed today are what type of investment? It comes under Section 80C. Section 80C of. So then Senior Citizen Savings Scheme, National Savings Certificate. There are many, one more module is there, that is small savings scheme. Basically, it is a post office savings scheme. Okay, today I am not discussing. Don't worry. Okay, so but all come under. These are, for example, Suganya Samriddhi is a small savings scheme. Public Provident Fund, small savings scheme, which is a post office savings scheme. Okay, senior citizen savings scheme, national certificate, 5-year bank, sorry, not 5-year, there is this. So these are all. Now there is one ULIP, okay. ULIP comes under home loan, okay, keep this in mind, okay. Home loan principal repayment, this is a very interesting point to note down. 5-year bank FD. So if you are not having anything, have a 5-year FD up to 1.5 lakh, you will, then home loan, if principal repayment, not interest. Interest receipt, there is another deduction is there. For interest up to 2 lakh, you can claim it, okay. NABARD, ULIP, okay, I'll explain what it is. Then Rajiv Gandhi, there is a equity savings scheme is there. Actually, in order to promote people to invest in stock exchange, this scheme have been included. So all these comes under, so you can write it down. Don't by heart it, just connect it, relate it. See, one suggestion, just 1 minute suggestion which I want to tell you is that, okay, I have seen students mugging up facts to write the prelims test. You are a fool. Reason being, you are not attempting a fill in the blanks question. Prelims test series is not a fill in the, which we do it in schools, fill in the blank. This is a multiple choice question where answer is there in front of you. So no need to mug up, rather relate it and have an idea. You have to eliminate or you have to pick up. No need to recollect it. So since your answer is there in front of you, don't try to first, don't mug up. Second, don't recollect. If you do these two things, one common point factor will come into it, tension. If you have noticed one thing, the last week I have revised. Now I am not able to recollect. I am gone. I am going to fail. Foolishness, not required. Why? Multiple choice question. Logic. It's there. See, your answer is there in front of you. So I know that from your face, 90%, not 100%, having saying, yes sir, I have this problem. Okay, that's why please don't do it. Just read it and don't recollect it also. The brain has that capacity. When you see, if you have read once in prelims properly, on the examination day, will tell you, this is the answer. That is what is required. But unnecessarily what you will do on June 1st, I'll tell you what you will do on June 1st. June 1st you will not be able to say, history, I have medieval India, what that war, this war, articles, constitution, principles, why? So January 1st, fever, tension, headache, then some people will have, they will not get up from it, but then they'll call, Mama, Papa, I can't write, I'm not confident. Then don't write beta. Next year, same thing. Please don't do it, okay? So you please go and write it, okay? So this is the reason for why students are not, after studying also, if you are not qualified, means you are not getting good marks. One of the major reasons is what I discussed. Please don't do it, okay? Now, ULIP, okay, I just want to explain this concept because all other thing I have discussed. ULIP is just a hybrid instrument, okay? So ULIP means, it's an investment, but what type of investment? Investment linked to insurance. So basically an equity investment where it is linked to what? Insurance, okay? So basically ULIP, when this instrument was introduced, there was a fight between SEBI and IRDA. Fight between two regulators. Who will have this control? Who will be the regulator of this particular product? Because it has insurance and it is also having mutual fund. And finally, that's one of the reasons why this FSDC was set up. Inter-regulatory coordination. When two regulators fight, a third person, finance, they don't fight, you take. I'll give you, the RBI and SEBI used to fight for debt instruments. Okay, so there used to be regulatory fight. Regulators used to fight. So that's a common thing, India. Okay. In India, people only know how to fight. They don't know how to be together. Okay, anyway, ULIPs are hybrid products. What type of hybrid product? They cover life insurance plus investment. So investment in the form of, basically this investment is like a mutual fund. Okay, it will be investing. So your money will be invested in a mutual fund, but you will get life cover also, life insurance cover also. That is the basic thing. Hybrid instrument, these two things, mutual fund investment, but having life insurance cover. But you need to lock in for 5 years. You cannot withdraw it. That is the only thing. Again, ULIP comes under, we already discussed ULIPs. Why ULIPs we discussed? Because it is coming under, because this, see, when you see this, don't get confused. ULIP, why I discussed, now I discussed it also. Under income tax savings. So, this is coming under section 80C. So if you invest in ULIP also, you will get 1.5 lakh tax exemption. Even you invest in life insurance also. So two benefits. Rather than investing in life insurance, you're getting dual advantage. You are getting life insurance also. You are investing also. You will get better return also. So you can invest multiple sources, but if you can invest 10 lakh also. But 1.5 lakh only will be considered under tax reduction. Remaining 8.5 lakh will be considered as your taxable income. You get to the point. That's why I'm telling all these instruments you can use. See, imagine you are having 50 lakh is your annual income. Not monthly, annual income, 50 lakh. If you want, you can 20 lakh you can invest in these instruments. Or 25 lakh also you can invest. But all will be considered as taxable income except 1.5 lakh. Then everybody will do this. No? The government will not have any income. There is another section 80D. Okay, another. See, in the material contains many things. Just read it and forget. But two things don't forget: 80C and 80D. Read it. Forgetting means automatically it will happen to you. Don't do anything. You don't need to do anything. It will happen. See, think about me. I don't know what I taught in module 3 unless and until I see the material. I see the PPT, I'll recollect it. So I don't do that. Please don't do it for yourself also. I already told you. In mains you have to recollect, not in prelims. So section 80D is dealing with one particular product, that is medical insurance. Don't get confused with life insurance and medical insurance. Is it same? No. Life means if something happened to your life, your family is insured. Okay. But medical means in relation to your. So you had seen that when many people going to hospital using that card has been given. What do you say that that word has been used? No cashless hospitalization. Or what that word is there? If you have a card, medical card, which you have invested, and it will say that up to 3 lakh. There are different schemes are there. If you purchase 6,000 product of medical insurance, depending upon your age, they will say that up to 3 lakh. If you hospitalize, condition is you have to hospitalize. Just for, and up to 3 lakh, they will pay. That is the product is all about, medical insurance. Okay. So section 80D will provide you tax. So this is additional over and above the section 80C. Section 80C 1.5 lakh. Section 80D gives you another additional 25,000. 25,000, not big amount. Okay. So section 80D provide you tax deduction for one factor. What is that factor? Medical insurance premium by an individual or an. So section 80D is for medical insurance premium. So this is over and above the deduction under section 80C. So 1.5 you will get under 80C, 25,000 you will get under section 80D. So 1.7 lakh. But again, so this here comes IRDA will come into picture. Insurance means IRDA, pension means pension fund regulator. Okay. So there are two things to note down. In case the payment of medical insurance premium is paid by the assessee. Assessee means income tax assessee. As that word, it's a tax word. Okay, you are not using even pay. Anyone who is paying tax, they will understand. So if you are a taxpayer, according to a tax official, you are an tax assessee. Okay, so if you are paying for yourself or for your wife or your spouse or your dependent children, so up to 25,000. So you can spend for 6,000 for your wife or your spouse or not for fiancé. Okay, if it is then your dependent children up to 25,000 you can do it. In case if it is a senior citizen, if you are giving for your senior citizen, for example your parents, maybe who have gone senior citizen, then that amount can go up to 30,000. So for you and your children, your spouse, 25,000. Senior citizen, 30,000. And only 2 point to note down. So nothing too much about section 80D. One product, medical insurance. Normally it is 25,000. Senior citizen, it can go up to 30,000. That's it. So nothing else. No other thing is there. Section 80C has many options. 80D has only one. See, these are the different which we discussed. Okay. Just for your knowledge, you just have an idea. These 1.5 lakh for section 80C. Then other things which if it is given in your material, don't put your head too much. Okay, and I just want to clarify certain things. Okay, there are this additional, see that employers contribution to NPS account, employees contribution to NPS account with employees contribution to NPS account. Then another thing. Okay, this is this point. Okay, I think you can write down. Not the section. not the section, but the provision. Okay, this budget have increased interest income from savings account. Not only savings account, so interest income up to 10,000. Okay, sorry, interest income from savings account up to, see, maximum I'll tell you 40,000 is for other interest income. Savings account is 10,000. Okay, so just have an idea. This budget have increased the TDS. TDS means tax deducting at source have been increased from 10,000 to 40,000. Actually, that if you read watch that video in budget, that's a very important video. You may get one question from it. Please go through it. Okay. Then these are the other this HRA. Then this interest on education loan. Okay. If you are having educational loan, for your kind knowledge, that is tax exempted. If you are in a, then home loan. There is interest on home loan for the first time home owners. There is an amount is there, and that have been increased also. Then Rajiv Gandhi equity scheme, medical insurance we discussed under medical thing. Then that is also increased also. Medical treatment for handicapped, other related medical expenditure. So there are many. See, I'm just showing you that there are many. Not only section 80C, 80CC, like this, 80D, 80DD, 80DDB. All these things are there, but not at all important for you. For reason being, they will not ask you this question. Okay. So there are many income tax savings provisions are there. So basically try to understand that why the government is giving you many tax exemptions. One of those, the basic purpose of these tax exemption is what the government can't do directly. If you notice one thing, in developed countries, many of the things which we are getting are free. For example, your child education is free. Now, but here it is. So there are actually many things the government have to do it directly. But for that, government should have fund. We should be a developed country, since we are a developing country. So many things regarding social security, and also one of the primary goal of tax exemption is to increase savings in our country. Right? All these things, if you notice one thing, all these instruments have one common thing. They are basically going for investment. Your money is being saved for some investment purposes. So a country like India, which require huge money for investment, your savings, your household savings will help in the economic growth of the country. I told you, one of the basic factor for more goods production and more production in services is investment. And from where you will get the investment? From your savings. So household savings. So but this household savings is in the last few years is coming down. That's the reason the government is trying its best. Why household savings is coming down? Because you are spending more. Your consumption expenditure is, this global culture is not thinking about the future. We only think about the present. Okay. So that's one of the reason, but we have to reverse that particular trend, especially for the economic angle. And even donations. Okay. If you have noticed one thing, electoral bonds. Okay. Electoral bonds, donating to political parties, then donations to Prime Minister Relief Fund, many sports fund, culture fund, all Clean Ganga Fund, Swachh Bharat Kosh, all comes under donation, which is 100% reduction without any qualifying limit. Okay. So if you are for these purposes, and you know that all these is having nationalist goal in mind. Okay. All these, if you are funding, so there all your money will be 100% deducted provided. So if you are having that, so these basically will be used by the corporate people. So corporate people, how they will be forced, these political parties will force them not to give money. They will not be giving at their will. So they will decide that, then they will give and take the exemption. That's it, directly and indirectly. Anyway, so these are the things. Please go through it and write down important. But I am telling that this material on module 7, income tax savings, no need to read too much about it. Just have an idea what are those section 80C and 80D, and if possible read 1 or 2 articles which I will be sharing in your speed economic group.